Welcome back. Financial Issues. I'm Dan Celia, American Family Radio Network. Lots of other networks joining us here for this hour of Financial Issues. It's great to be here. We are going to continue to take calls. All the major indices in negative territory. So we'll watch that. Not a lot of economic news coming out, as I've already said. So we'll watch it, keep you updated. Oil's still over $100 a barrel. We've got gold down, silver's down. Most of the agricultural commodities, well, they're actually mixed. Last time I checked, I can't check right now because I've lost my site there. I'm not sure why, but last time I looked, they were pretty much mixed. Not a lot of big movement either way in there, and that was about 15 minutes ago. 866-300-9298. Let me go to Bill. Bill's calling us from Georgia. Hi, Bill.
Hey, Dan. I got a pretty simple question. I think I've been with my company I'm working with for 25 years. I got a retirement with them, a company retirement, and I had a 401k. I still got a 401k, and I've contributed for about 15 years. And then I got into a Roth and quit contributing to the 401k. The company still contributes, whether I contribute or not. Do I need to go back and start contributing to the 401k, or just concentrate on the Roth?
When the company contributes, Bill, are they contributing like once a year at the end of the year or beginning of the year, or do they contribute, on a more regular basis?
They contribute 1% of my pay every pay period.
Okay. So, and is it going into the way you had it allocated?
Yes.
Okay. Here's the thing. Here's what I'm concerned about. When do you think you'll be, retiring? How many years?
I'm 49 now, around 62 or 65 tomorrow.
Okay. So here's what my only concern is about not contributing to the 401k. My concern is that I know the market is going to downturn, as it has, if we just look at today and Friday. But I'm afraid the market's going to take a downturn. And during that downturn, as the market is turning down, I would like for you to be contributing to that as much as you possibly can be throughout those months of a downturn. Because I want you to be able to, I don't know what you're invested in there, but I'd like you to be able to buy in cheaper, at cheap prices. Here's what I don't want. I don't want everything just sitting there like it is now. A downturn to happen. Let's say the market turns down 20%. Your funds turn down 25%. And then you're just sitting there waiting for it to ride back up. Yeah. Well, now, for you waiting for it, it could take years and years for it to come back up. But if you were contributing on the way down and you're contributing on the way up, you're probably going to cut your recovery time down, dramatically. I don't want to say in half, but it could be in half, could be more. But you're going to cut it dramatically. And so that's why I'm interested in you, contributing on a very regular basis. Because in the long run, through the weak market, it's going to help. Now, to counter that, if you didn't want to do that for one reason or another, then if you took the position to make sure that 60% of what you have in there is in whatever they offer that is the absolute most conservative thing. Let's say, they have a money market account. They probably don't, but maybe they do. Or they have a short-term bond fund. You contributing into, the most conservative thing with about 60, then I wouldn't be as concerned because that 60% is not going to take that downturn.
That's even though that's even though that I have a separate Roth account that I'm contributing to every pay period.
Yeah, I mean, I like the idea that you're doing that. I just wonder, since you contributed to this for so long, that's probably, the 401k's probably got more money in it than the Roth, right?
Yeah.
Yeah. I mean, so I'm kind of worried about that big chunk of money going down So I would say you either get more conservative. What are you in with that? What funds are you in?
It's
You
in
know?
the highest risk plan. Is that the highest
In the
risk?
401 in the 401k?
Yeah.
Yeah, you definitely got to do one or two things. You either got to get out of that high risk and get into, which has served you well for the last couple of years. But, I would like you to either get out of that and move into something much more conservative or start contributing to that again. I think you have to do one or two things.
Okay.
Yeah,
Well,
I think you have to
appreciate it.
be. Okay. Thank you for that call. Great stuff. I hope that helps. Let me go to, let's see, Bonnie. Bonnie's calling us from Pennsylvania. Hi, Bonnie.
Hi, Dan. Great to talk to you. I
Thank
will
you.
be 71 this summer, so I know I have to start taking money out of my 401ks. I have two. And
Okay.
so I need desperate help because I do not like dealing with finances. So
Okay.
what do you suggest? Do I have to take out a percentage out of both the accounts, or can I just take out of one?
Yeah, so you have to take the minimum required distribution, and they're going to tell you, both accounts are going to tell you what that is. Okay, but you can take it all out of one. So you don't have to take that. So let's say one account says you got to take $1,000 out. It's going to be more than that, but one account says you got to take 1,000, and the other account says you have to take 1,000. You can take 2,000 out of any one of the accounts as long as you take the minimum required. Does that make sense?
And right, I understand that.
Oh,
Now, where should I
okay.
put it?
Well, I would, it depends on what you're invested in right now. I would, so if you're do you have some in money market or cash or
I do.
something?
And, through our bank, I have over 200,000 in money market, and that makes me nervous having that much in one bank.
Yeah. How about the 401ks? What do you have that in?
I have it in Charles Schwab, 100K there, and in Vanguard, probably 60K.
And you have it in mutual funds in both places?
I couldn't
Do you
tell
know?
you, actually.
Okay.
A
Okay. Well,
very conservative investments, let's put it that way.
okay. Yeah, I mean, I would probably take your minimum required distribution out of the larger one. That would be fine. And I'd like to see you, you're going to obviously going to put that money in your money market account that you already have. But I would like to see you consider, having a few, something a little bit more, maybe some utility companies. Are you using any of this to supplement your income?
No,
Okay. Will you be, do you think?
I think so. My husband's 9 years younger than me, so he's in his early 60s now, so he will be working for, a few more years.
Right.
And I get Social Security.
Yeah, I mean, I would like to see you maybe look at a utility stock or two to try to generate a little bit of income. I would even, I wouldn't, I'm talking about maybe with $50,000. You obviously don't want to take a lot of risk, and I get that, and I'm okay with that. But at some point in time, I think you might want to move, $50,000 or so into, either a individual bond, not a bond mutual fund, or some utility stocks, a couple utility stocks. And that means you're going to have to get, you're not going to be able to do that at the bank. So, it means you're going to have to open an account like at Charles Schwab, where you already have an account, to be able to do that. And they can help you with that, just to open an individual account. It's just a joint account that you would open, or an individual account that's an investment account. And then, move some of that. They'll just automatically move when you take your distribution, that 2,000, whatever the distribution is, it's going to be more than that. But that distribution, you can just have them move it right over into this new account. And then I would use that account to do a little investing. And I think that would be prudent for you to do some of that.
Mm-hmm. All right. And may I ask you another question about my
Sure.
mortgage? All right.
Yes.
Our mortgage probably balances maybe $30,000, and I have a variable life insurance policy on my husband of $130K. I'm paying him $100 a month for it now. Been doing that for several years. Is it, should I continue with that variable life? If I surrendered it now, I'd only get like $7,000, or should I just pay off the mortgage?
Well, I would like to see you pay off the mortgage. I would say this about the variable life. If I would assess, is your husband in good health?
Yes.
I would say that if you need a death benefit, and the way you determine that is real simple, Bonnie. The way you determine that is if your husband were to die today, and would you suffer a financial hardship? In other words, would you not be able to live the way you need to live? Would you not be able to, pay some of your bills and those kinds of things? Would there be a financial hardship? If the answer to that is yes, then it's not a bad idea to have some life insurance. But one of the things that you might want to consider is I would at least price out a $150,000 term policy, 20-year level term on your husband. I'm suspecting that it's going to be less than $100 a month. And you only have it for 20 years, but I'm going to assume that at the end of 20 years, based on what you've told me, if there's a financial risk now, there won't be in 20 years. So, hardship now, there won't be in 20 years. So if, you might want to look at that. If you price it out and find out that it isn't any cheaper, and you would have a financial hardship, then you got to keep the life insurance, at least until you feel you're over that hump of this hardship. Does that make sense?
Okay. It does. Thank you so much. For someone, I don't like dealing with financial issues. We're not in debt, and I'm a good steward with our finances on a fairly good basis. I just don't like dealing with it. So having somebody like you to listen to is just a great blessing.
Well, thank you for that, Bonnie, and I really appreciate you listening. It's great to be getting calls from my home state there. I love that. So thank you so much for listening. I sure appreciate it. And thank you for those encouraging words. I'm glad it's helping you out. Let me go to Francis. Francis calling us from Iowa. Hi, Francis.
Well, hello. This is the first time I've tuned in to you, and I like what I'm hearing, so thank you.
Oh, you're welcome.
We have invested in Franklin Templeton, and we have, as part of our portfolio, and we're in our 70s. We do have mostly conservative, of course. We've been advised to take the aggressive part of that investment, put it into more conservative because of whatever type of financial situation is occurring in Puerto Rico, because a part of those Franklin investments being invested there. Can you tell me what's going on?
With Puerto Rico?
Yeah, that we would be advised to come out from the aggressive. And as I said, we're in our late 70s, and we do have to be conservative now.
Yeah. Well, I think that was good advice. If you're involved, if any part of your funds are involved in Puerto Rico, I mean, what's going on in Puerto Rico is their economy is in big time trouble.
Okay.
And it continues to be. And what we're seeing is their bond values are coming down. The interest rate in which their bonds are paying is going up, which usually indicates trouble. It's not necessarily a good thing. It may feel good to those that are getting the interest for a temporary basis. But, they're not a stable economy at this point. And, I can't say, I believe that there is a risk. There's always a risk of them going into default. And I certainly don't think it would be a good idea to have anything exposed to that market, not especially at your age. I don't think that would make good sense at all.
Okay.
So I think that it makes good sense to get more conservative, and I wouldn't argue with that at all.
Thank you. You've been most helpful. And you were at www.financialissues.org or com?
Org.org.
Org. Okay.
Yes.
Thank you.
All right, Frances.
To you again. Thank you.
Thank you, Frances. I sure appreciate you listening and appreciate that. And it is financialissues.org if anybody wants to check the website out. You're listening to Financial Issues, American Family Radio Network, and 866-300-9298. We'll be right back.